via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now.
Hi, good morning. Good morning, everyone. I hope you had a good breakfast and looking forward to a good weekend. State elections are over. The country is now hopefully back to normal, which is maybe not as normal as what it used to be. And for those of you who watch the stock market closely, I mean the Malaysian stock market, you notice that the results of the 6 state elections did not really have an impact on Bursa Malaysia. I mean, it was not really positive. It was not really negative. It was pretty neutral. And I think if you look at the bigger picture overall, the factors which concern investors a lot more would be those like the Chinese GDP recovery, the overheating US economy, and the impact on US monetary policy. So those are the external factors, and unfortunately those are the ones that I think, from my observation, are the factors that are weighing down on not just Bursa Malaysia, but if you look at other markets throughout. For example, like say for example, or ASX, the kind of thing. And if you look at Singapore side, their economy the government has lowered the GDP forecast for 2023 because exports for Singapore have been plunging. It's the rate of decline for Singapore's export is actually at a worrying rate. You're not talking about 2-3% decline, you're talking about double digits. And it's not 1 month, it's for many, many months. So it's the bigger picture. The overheated US economy, linkage to US interest, linked to US interest rate, and therefore the New York stock market, exchange rates for a lot of countries, and then the Western media. If you read Western media, whether it's whatever it is, like New York Times, Washington Post, Financial Times, there's a lot of, they're taking advantage of the current opportunity to write as many negative stories as they possibly can about the Chinese economy. I can have another session on this, whether the Chinese economy is about to collapse or whether the Chinese economy is about to strengthen even further. We can have another session if you guys are interested. But quick answer on that is the Chinese economy is not about to collapse. Get the facts, strip yourself away from all the hype, and when you look at the basic facts, the Chinese economy is performing what the Chinese government wants it to be, more or less. I mean, it cannot be exactly everything, but generally, overall, the Chinese economy recovery is going the way that it should be. So our Bursa, if you look at, say, let's look at the last 10-12 years. Let's look at the first diagram for this morning, right? So the 6 state elections had neutral impact. And if you look at Bursa from this about 2012, right, until now, this is the KRCI. And in that 11, 12 years, the KLCI has tried to go above 1,900 points. If you can see the two blue circles, yeah, there's one around 2014, and then after that, the KLCI plunged. Quite a severe bear market, and then after that, it tried to rally and tested the 1,900 points again around 2018. It couldn't go above that. And since 2018, the KLCI, you can see for yourself from the chart, has been in a pretty severe bear market, right? If you look at, say, 1009 in 2018 down to early 2020 when the pandemic crash occurred, that is a drop of 1009 to 1002. That's a drop of 700 points. And this is based just on the KLCI, not counting individual stocks, right? And then it tried to, after the crash, which was a severe, short-lived crash, and it bounced back like the rest of the world. The KLCI bounced back pretty quickly. But if you look at the chart, it bounced back from 1002 to about 1,600 plus, and it only lasted for just about a year. And after that, the KLCI has been dropping again. So you have from 2018 to about 2023 now, which is about, 5 years of pretty consistent bear market. That's a very challenging environment for any investors. So if you face this kind of situation, you face this type of market condition, what do you as an investor, what do you do? Right? I mean, do you just give up? Some people do, some people just give up and then buy properties. Unfortunately, Malaysian properties have also not been doing that well. And some people just really play it safe and put their money inside fixed deposit. And if you look at it in the last, from 2018 up to now, those who put their money in fixed deposit, especially recently when the fixed deposit rate has gone up, it's not such a bad decision, right? Of course, previously the fixed deposit rate was lower. So that's in the past. The important thing now is what we're talking about is the future. What should you do in the coming months, in the coming years? I'm not sure whether you are familiar. Let me share with you the performance of this performance for the last 1 year, the last 2 years, the last 3 years. If you notice, this performance chart is up to 3rd August 2023. So if you look at the 1-year return, the profit, the gain the investor would have made by investing in this stock is about 17.3%. 17.3. The MSCI fell about 3.5%, right? So our performance is tremendous. And if you look on a 2-year basis, right, the share price went up almost 33%. And the MSCI, which is similar to KLCI, MSCI Malaysia, fell 5.7%. And on a 3-year basis, which goes back to 2020, around August 2020, so you go back a 3-year period, again, the MSCI plunged almost nearly 15%, 14.9%. And the share price went up 28.9%. So in that few years, in the 1 year, 2 year, 3 year period, even though KLSC Bursa Malaysia has been weak and it has been pretty volatile actually, volatile and weak at the same time, you find that if you choose correctly, if you pick the right stock based on the correct investment philosophy, the returns that you make can actually be pretty wonderful and they can be sustainable. So this performance that I've shown you here is There are two. You can see the red column, which is the net asset value, and then the one which is pinkish in color, that is the share price. Now this stock I'm referring to is icapital.biz, Berhad. Right? So I will call it for short ICAP. I'm not sure how many of you are familiar with icapital.biz, Berhad. The code is 5108. The short name is ICAP, and it is listed on the main board of Bursa Malaysia. For those of you who are very familiar, great. For those of you who are not familiar, it is a closed-end fund listed on Bursa Malaysia. Since it's listed since 2005, and why we're sharing this with you is because there are some exciting things happening in iCap Berhad, and if you're already a share owner, I think it will be great for us to share with you, because we did our roadshow from early July to end July, where we went across the whole country talking to our investors in iCap. So we already done that, and I thought maybe this YouTube session, this virtual session could be a very quick way of updating you on what is happening. For those of you who are new to icapital.biz, Berhad, I think it is, if you are serious about enjoying good returns with low risk, I think it is definitely worth your effort to dig in deeper, find out more about icapital.biz, Berhad. So the quick attraction, the quick summary of the attraction is that, the condition locally and globally have been extremely unprecedented, volatile, turbulent. It's really everything, every factor that you can think of that can affect the economy and stock market. All of them have happened, which is we have never seen before globally. So in that kind of very stressful environment, you find that the share price of ICAP has reached all-time high. It's, in fact, among the, I think, very few listed companies on Bursa that has got the stock price trading at all-time high. Remember, the KLCI was 1,900 in 2018. Now it's about 1,420, 30. So the KLCI has dropped about close to 500 points, and ICAP share price is at all-time high. Its net asset value, NAV for short, is just a little bit below all-time high. So here you have, unfortunately, a lot of investors are not familiar with icapital.biz, Berhad. So you have here right in front of your eyes a solid investment that is able to give you decent returns with hardly any risk. I will explain to you why there's hardly any risk. Partly based on our investment philosophy, partly based on the discipline that I, as a fund manager, is able to impose on icapital.biz, Berhad. So take a look. For those of you who are new, for those of you who are already shareholders, let me move on and explain to you what is so exciting. Now, before I do that, I'd like to explain to those who are new the next diagram here. This is a paragraph from the 1985 letter to the shareholders of Berkshire Hathaway. Berkshire Hathaway, many of you would know that it's a company owned and managed by Warren Buffett. And why we use this quotation from this 1985 annual report or the letter to shareholders is that it sums up a very important fact that most investors don't appreciate or don't realize. They don't realize it's like in an election. You may criticize the political leaders, you may criticize whatever it is, but you have to sit back and think. The political leaders were elected by the voters. So the voters actually determine the quality of the political leaders. Same thing for a company's share price. I mean, we're not talking about artificial manipulation, syndicates. We're talking about a natural environment, right? Where the share price of any listed company is determined by demand and supply. So who determines the demand? Who determines the supply? It's the shareholders, right? If you have the right shareholders, the right quality, the right type of shareholders, you get the right share price. But if you get the wrong shareholders with the wrong mindset, with the wrong expectations, then you get irrational share price. Right? So the thing is, shareholders, investors must always be mindful of the fact that the share price is actually the responsibility of you as an investor in that company. If you want to sell at a big discount, of course the share price will reflect that. If you want to buy companies at a discount, the share price will reflect that. So what does Warren Buffett say in 1985? I wouldn't read everything. I'll just read for you the part which is bold and underlined. So he was addressing his shareholders. Because you meaning the shareholders of Berkshire Hathaway, because you have been rational, interested, and investment oriented, the market price for Berkshire stock has almost always been sensible. This unusual result has been achieved by a shareholder group with unusual demographics. So while Buffett continues to say that virtually all our shareholders are individuals, not institutions. Virtually all the shareholders of Berkshire Hathaway are individuals, not institutions. Many of you will be shocked. Huh? How come? I would have thought that you want to attract institutional shareholders. You would have thought that institutional shareholders would be the rational type of investors that would be able to give the share price a sensible valuation or trading at a sensible level. But here you have Warren Buffett, easily the most successful investor the world has ever seen, telling you, no, I don't want institutions, I want individuals. What, is he nuts? Well, he said this in 1985. Now is what, 2023, almost 38 years later, he's been proven right. I mean, he has been proven right a long time ago, but 38 years later, he's still correct. And he still say the same thing, that look, I am not interested in attracting institutions. I want individual investors who are rational, interested, and investment oriented. Okay, so we explain further why he doesn't like institutional shareholders. You might think that institutions with their large staffs of highly paid and experienced investment professionals would be a force for stability and reason in financial markets. They are not. Let me repeat that. Warren Buffett says they are not. Stocks heavily owned and constantly monitored by institutions have often been among the most inappropriately valued. Gosh, that is so profound. And that is so true. Because in the experience of icapital.biz Berhad, we have shared the same experience as Berkshire Hathaway. When we have good quality shareholders with individuals dominating our investor list, our share price traded at a wonderful premium at the highest premium of 27-28%. Then when these institutional shareholders, so-called institutional shareholders come in, like what Warren Buffett says, they don't act in the rational way. And therefore, our share price has been influenced negatively by these institutions. So coming back to my earlier point, it's not just for iCap Berhad, for any company, whether it's Merlin Banking, whether it is Carlsberg, whether it is Maxis, whether it is Hatalega, you determine the share price. And whether it is trading at a sensible level or not, you determine it. You look at Maybank. Maybank is heavily owned by institutions, and Maybank share price has been underperforming. Maybank has got a pretty predictable dividend policy, about maybe 5 to 6%, which is not bad. And you know that Maybank earnings are quite predictable. But you look at the share price. The share price performance is horrible. And one reason why the KLCI has been dropping is because companies like Maybank are a big component. They have a high weightage in the KLCI. So when Maybank drops, the KLCI will drop. So why is it that Maybank, a company which has got pretty predictable business model, predictable earnings and dividend policy, but heavily owned by institutions, whether it's your EPF, whether it's your whatever institution, the share price doesn't reflect its true value. That is so sad. Unfortunately, what to do? Maybank, I don't know, I'm just guessing, companies like Maybanks and all that, they are not interested in attracting individual shareholders like you. A lot of listed companies would have analyst briefing where the investment analysts from CIMB, Public Investment Bank, M-Invest all attend, and then they send out their research reports to their institutional clients. But for iCap Berhad, we do not have an analyst briefing because, like I said earlier, we don't wish to attract the irrational institutional investors. What we do, which is very different from other listed companies, is we reach out to all individual investors. That's why we do the roadshows. Our roadshow stretches from Kota Kinabalu to Kuching to Singapore to Johor Bahru, Malacca, KL, Ipoh, Penang, Alor, nationwide. And the people we talk to are people like you today, individuals, where you are investing with your money, where it matters to you. So the commitment, like what Buffett says, because you have been rational, interested, and investment-oriented. And these are the type of investors that we are looking for, reaching out to. And they will be able to price whatever investment, whatever listed company that you invest in at a sensible level. Okay, so this is for those who are new to iCap. And the next slide is also to show you those who are new, those who are already familiar, bear with me for a few minutes. If you look at the right-hand side, the annual report of icapital.biz Berhad, this is 2022, last year. The two things that you need to note about our annual report is always printed in black and white. There are no colors in it. There are no photos of the directors, no photo of myself as the fund manager. The reason why we do that, the reason why we're doing this every year since 2005, it's been the same. In that sense, it's very boring. But there are two good reasons. First is the cost of producing the annual report is, I can be very sure, the cheapest of all the listed companies in Malaysia. There's no color, there are no photos. It's really cheap to produce our annual report. Second thing is the most environmentally friendly. Why is it the most environmentally friendly? Because if you want to produce a colored annual report with all the images and all those things, you need to use a lot of chemicals to produce a beautifully colored annual report. In our case, in the case of iCap's annual report, we only use black ink. I mean, we have to use black ink, right? If you don't use black ink, then the annual report will be blank. So we have gone down to the lowest in terms of cost, in terms of environmental impact. Now, how many listed companies in this region in Malaysia are so socially responsible as iCap? We don't have to do it. There's no law, there's no regulation that says your annual report must be in black and white and so on and so forth. We did it because it is the right thing to do for our shareholders, for the environment. Okay, on the left-hand side, that is the prospectus. The IPO prospectus of iCap in 2005, when we launched it in October. Again, the prospectus is in black and white. The whole prospectus, it is the only IPO prospectus in the entire Bursa Malaysia that is in black and white. The service providers at that time, Kenanga and Deutsche Bank, they wanted their logos on the front page to be printed in color. Kenanga says, it would be nicer if it looks in color. Deutsche Bank says, yeah, we should have our logo in color. My reply to these people was very simple. I said, you want to print your logos in color, it's fine, but you pay for it. Why should the investors pay to promote your logos, to promote your brands? So when I told them that you want it in color and you have to pay, immediately they say, it's okay, it's fine, we can print in black and white. Now, what am I trying to convey? That icapital.biz Berhad is not your typical listed company. It is a listed company that not only is socially responsible, but that has the interest of all the shareholders at heart. Why do we have to go and tell the Kenanga and Deutsche Bank this kind of things? Legally, we're not bound to. We don't even have to do anything. We just have to follow what the crowd does, what the rest do, and then print a beautiful colored prospectus. But that's not right. Because when we raise the money for the IPO of icapital.biz Berhad, it is not just our money, it is your money, it is the investors' money. And when you are managing other people's money, the level of responsibility is even higher than managing your own money. So this is the philosophy. This is how we do things in icapital.biz Berhad. A lot of things that we do are not legally required. There are no regulations that say that they are required. We do it for one simple reason, that they are the right thing, right from the shareholders' point of view, right from society's point of view, right from environmental point of view. That's what we do. So for those of you who are new, it may sound strange to you that Bursa has got such a company. Yes, there is one. It's been around for 18 years. And we are not just showcasing all this, we are also able to deliver in terms of performance. Share price is at all-time high. NAV is near all-time high. It's just about 2.3% below its all-time high. And I'll explain to you why the NAV is going to go up further. And you have the best of all the worlds. Next. So here you can see that the blue column shows you the value of the portfolio of iCap Berhad. That means the value of all the shares that we have invested in. From Apex Healthcare to Capital A to Padini to United Plant to Sam Engineering. So the blue column shows you the market value of the investments that were made since 2005. The red column at the bottom is the level of cash that we have held since 2005. If you notice, and then there's another line, the dash line, red dash line, that is the percentage of, that is cash as a percentage of the total net asset value, right? So what are the important points that you want to take away from this simple diagram? If you look at the chart, in about 4 or 5 years ago, iCap was holding about 300 million cash. The number of shares iCap has is about 140 million. So that means for every share, we have about $2, $2 plus of cash per share. That's because we couldn't find stocks that we think are attractive to invest. So no point. No point investing just for the sake of investing. That is not value investing. That is stupid investing. Even though I was under a lot of pressure from our so-called London institutional shareholder, Mr. Tan, why are you sitting on so much cash and not doing your job? I had the pressure from them every year in every AGM. But as a responsible fund manager, responsible to you, to our shareholders, and to be consistent in our value investment philosophy. We don't buy just for the sake of buying. You look at the way Warren Buffett does. Warren Buffett has got huge amount of cash in the last few years, 130, 140, 150 billion US dollars cash. And that's because he just doesn't simply invest for the sake of investing. So we, as a value investor, we have to keep to our promise. That is what we promised our investors in 2005, that we will be a value investor. Our prospectus says that our asset allocation, that means the allocation between cash and equity, can range from 0 to 100. We can have 0%, well, not 0% cash, like 2% cash to 98% invested. In the history of icapital.biz, Berhad, we have gone down. In 2009, our cash level dropped below 10%. Then it went up because we sold. We had many profitable stocks. We sold Petronas Dagangan. We bought Petronas Dagangan at about 5 odd ringgit many years ago. And we sold Petronas Dagangan 30 plus ringgit. After we sold, the price of Petronas Dagangan has never reached that level ever again. That was how overvalued it was. We sold because it was overvalued. So just selling Petronas Dagangan alone gave us a lot of cash. We sold Fraser and NIF. We used to have a lot of Fraser and NIF, F&N. And then we couldn't deploy because we couldn't find something attractive like, say, PetDag or F&N. So 300 million cash, that's history. But what is important from this diagram is that the cash has been going down, has been reducing year in, year out. By 2023, if you look at the May 2023 quarterly report, the cash level now is about, more or less, I remember, 140 odd million. So from 300 odd million down to 140 million, that means that icapital.biz Berhad has invested about 160, 170 million new investment. Now what does that mean? This 170 million of new investment will be the one that's going to generate the increase in net asset value in the coming years, right? In the past, if you look at those 2016, 2017, 2018, when the cash level was high, our return was dragged down by the cash, right? But now that we have reduced the cash by a big margin, that will create future NAV for you, for the fund. Some of the investment that we made out in reducing the cash is Capital A, SAM Engineering. We have bought some of a bit of United Plantation. We have bought quite a bit of Apex Healthcare. So we have made quite a lot of investments with 170 million, and that will translate into future NAV gain. If you assume that the compound return is going to be 8%, the compound return of the NAV in the coming years is going to be 8%. That means this 170 million will double in about, take 72 divided by 8, you get about 9 years. So 170 million will double in 9 years, not including the current portfolio. But the 8% compound return that I gave you is based on a figure that included periods when we have high cash level. When we have low cash level, the compound return of iCap Berhad shoots up to 12 to 14% compounded per annum. Now, you compound 14% per annum, that 170 million will double in about 5 years. Not counting the balance of the other portfolio, It's not counting the fact that iCap still has about 140 million cash to be deployed. So this is where the excitement comes in. The NAV will increase. How fast, how soon, I cannot predict, because that will depend a lot of factors. I mean, globally, the stock markets, how do I describe the current stock market, the global stock market? In one area of the world, there are a lot of bubbles. In another area of the world, there are a lot of wonderful gems which are overlooked. So it's a very unbalanced type of global financial market. In one part of the world, things are going to topple soon. In one part of the world, people might eventually realize that, I've overlooked this segment, is so undervalued. So how it's going to play out, how the New York stock market, the US economy, the European economy, the Ukrainian crisis, China's recovery, Japan, my sense is that the Tokyo stock market is very near bubble level. So how are things going to play out in this year, next year, 2025? I don't really know. And in a way, I don't really bother with that, because value investing is not about timing. A lot of investors like to buy low, sell high. That's the typical advice, right? To be successful in the stock market, buy low, sell high. But that sentence is not complete. That advice is not complete. When they give you that advice, what they're referring to is buy low in terms of share price, and then sell high in terms of share price. And that essentially is a timing question. When is the market going to bottom? When is the share price going to bottom in terms of share price? When is it going to peak? Timing questions are very difficult to answer accurately. I can give you an answer. I can tell you that the market is going to tumble. I can tell you that the market is going to rally. That's the easy part. But how accurate are they? How reliable are they? Because if you can time so well, buy low, sell high, and get it correct most of the time, you'll be filthy rich very soon. You don't have to work so hard. You don't even have to bother with people who are like value investors and so on. But in the case of timing, buy low, sell high, like I mentioned in other live session, okay, you buy stock A at 2 ringgit, You're so lucky you sell it at 4 ringgit. After you sell at 4 ringgit, then what do? You reinvest. You buy stock B, right? Stock B you buy at maybe 6 ringgit, and you're not so lucky. After that, it goes down to 3 ringgit. So all the gains that you made from stock A, which went from 2 to 4, and then when you reinvest in stock B, which went from 6 to 3, all the 100% gains that you made in stock A are all wiped out. Which is why when people say buy low, sell high, and you engage in market timing, no one has been able to succeed it on a consistent basis. You can succeed it on maybe 1, 2, 3 years, you're lucky. 5 years may be lucky. But over a long period of 30 years, 40 years of investing, no one is able to succeed in that. Right? So this is different from value investing. Value investing means that when something is undervalued and attractive and well managed and so on and so forth, you buy it and you hold it. When is it going to go up? I don't know. But from my experience, from my research of value investing is this. If you pick the right stock, undervalued, well managed, sooner or later, something will happen to crystallize and unlock the value and move the share price up, which is what is happening to iCap Berhad. That's why the share price is at all-time high. 1 year, 2 years ago, people say, why buy iCap? So boring. Share price like that, But in the last 1 year, it's gone up. I mentioned earlier, last 1 year it's gone up by 17%. That's not to laugh at, 17% in the market where a lot of people lose money. In the last 2 years, the share price got up 33%. That's even more impressive when the overall index fell 5.7%. So don't worry about timing. More concerned with, did you invest in a company, whether it's iCap or any other listed company, at sensible valuation? Because if you do that, you almost be very sure that eventually you make money. So here I'm sharing with you that the NAV of iCap Berhad should be going up. It's not going to go in a straight line like every month going up. It probably will be up, down, up, down, up, down, up, down, right? But if you look at it 3 years, 5 years from now, the NAV is going to be much higher than what it is. What about the share price? Well, maybe we can take a look at the next chart, the next diagram. Not sure how many of you are technical analysts or familiar with charting. Here we show you the chart of the share price of iCap since day one, 19 October 2005, up to now. This is also the diagram that I showed our investors in our roadshow. And if you look at the trend lines, the three blue lines that is going up like that, yeah? At about, when was that? Middle of 2023, middle of this year, around May, June, you'll notice that the share price was almost touching the lower support line again. And if you look at the top, which is the monthly MACD, right? The red line at the top where there are 4 blue circles, right? So that is one of the technical indicators. And around May, June 2023, the MACD turned bullish. Every time the red line crosses the blue line for the MACD, that is a bullish indicator. You look at it in the other blue circles, right? It happened in 2009, it happened around 2016, and it happened in 2021. Each time the MACD turned positive, the share price of iCap went up. So the same thing happened middle of 2023. The share price nearly went to the support line and then turned up. So what does the chart tell you about its potential target? Well, the first potential target would be maybe around 4 plus, I think, if I'm read it correctly. Yes, it's about 380 to 4 ringgit. That would be the first target. And then once it's able to cross that level, then the next target will be 5 ringgit and above. You may say, well, now it's about 280, 280, 280 something, 4 plus, no big deal, 5 plus, no big deal. I think you got to bear this in mind. Don't just look at return, look at the downside risk. Here, you have a company where the cash has run down, a lot of new investments have been made, which most likely will generate increase in NAV. Point number two is still got 140 odd million cash which can be deployed in case the stock market globally crash. Then you got 140 million bullets to use, right? So the company that you have now, this iCap Berhad, it's conservative, low risk, but high return. And if markets don't crash like what they used to, I mean, in 2020 or in 2008 and so on and so forth, then there's a good chance that the share price would hit 4 ringgit or 5 ringgit or even above, together with a NAV that's climbing up. Now, I'm not sure if you all have read the newspaper today or gone to the website of iCap. We made an announcement, a very major announcement, that the fund, iCap, is intending to formulate an innovative dividend policy, right? Which will, in future, automatically remedy the discount between the NAV and the share price. And the dividend policy is so innovative such that when the share price is trading at a premium to net asset value, you will still get dividend. It's a breakthrough. It's very innovative. We have been working on strategies like that for many, many years. And it's a lot of work, painstaking research, a lot of work, but finally we're able to come up with something that addresses the needs of different types of investors in icapital.biz Berhad. Where the first category of investors in iCap Berhad is those who only want long-term capital appreciation. I belong to that type. I am not really interested in the share price. I only want the NAV to go up consistently. And if you go to YouTube, there's a short video on who is Stunting Bull, what is Stunting Bull. You watch that one because that is interesting. That is an interview with Mr. Yi from Johor Bahru. Mr. Yi invested in the shares of iCap way back in 2005 at inception. After that, up to now, he has not sold any of the shares. He is our most senior shareholder. He's almost 90 years old. 90, right? So there's one category like that who will want to keep the shares forever, like those investors in Berkshire Hathaway, where they can keep the shares for 60 years. And the second category where they may need, for some reasons of their own, they may need some form of regular income. Maybe certain expenses that they have to meet and so on and so forth, right? Or maybe they want to do some shopping. And then there's a third category who, for whatever the reasons that they may want to cash in. So this very innovative dividend policy that we're formulating will address the needs of these three group of investors. At this point in time, I cannot provide more details on the innovative dividend policy, but what I can say is we work very hard on this. I mean, to the extent that to help us, we use external professional advisors, not just our internal research people. We also even engage academic consultants from overseas to help us formulate the whole thing. So I think in due course, whether it's AGM or before AGM, whatever, in due course, you will get details, full details of what this innovative dividend policy is all about. And with this, what does it mean? It means that the share price, the performance of the share price, the increase in the share price performance should be more sustainable. Of course, in market crashes and all that, stock price bound to fall. Even the share price of Berkshire Hathaway also will crash when the market crashes. Same thing is going to happen to us. But if you go through the cycles, go through that, you find that the share price will perform on a sustainable basis, which is why we need to have this dividend policy, this innovative dividend policy. I mean, the whole thing, the whole package is it's very comprehensive. And when I'm able to share with you, then you understand what I'm talking about. So, what is so interesting about iCap? Quick one, it's got solid track record, really solid. NAV is bound to go up because we have invested 170 million with another 140 million spare waiting. The share price, if you look at technical analysis, is showing you all the positive signals. Now, whether you want to buy it for trading purposes for 1 month, 2 months, or whether you want to buy it and keep it for longer term, that I will have to leave it to you, that you have to decide for yourself, because it will depend a lot on your personal circumstances, your financial circumstances, your investment objectives. But just to share with you how, for example, how we built our portfolio. iCap has got capital A. iCap has got Hibiscus Petroleum. So for those of you who are alert, right, you will find that this is very interesting, because if oil price falls, capital A will benefit, Hibiscus wouldn't, right? If oil price goes up, Hibiscus will benefit, capital A wouldn't, right? So we have within these two stocks a kind of hedging mechanism, but also you can have a situation where oil price goes up, both stocks can go up, or oil price goes down, both stocks also can go up. Right? Now, how? I'm just giving you one example. For example, oil price can go up, but that is not the important thing. The important thing is the rate of increase. Now, if you look at the West Texas Intermediate, the WTI, which is one of the benchmark for crude oil other than the Brent crude, it's about around 80 to 82 US dollars per barrel. Let's say for some optimistic reasons, US doesn't go into recession, China's recovery bounce back strongly, Europe comes out of recession, oil price goes up to 160, 150, 130, I don't know, right? But let's say it goes up a lot. That is only one dimension of the oil price. The other dimension is the time it took to reach that level, the rate of increase. If it goes up from 80 to 160 over 3 years, 5 years, then you have no impact on capital A, but has a lot of impact, positive impact on Hibiscus. If it goes up from 80 to 160 within 6 months, 9 months, you have a lot of positive impact on hibiscus, and maybe some negative impact on capital A. So here we have a hedging between capital A and hibiscus that, can I say, you can have your cake and still eat it. So this is how we manage ICAP. It's a lot more sophisticated than what people think it is, and it allows the NAV to be sustainable. So, review a few things here, quite a lot of things actually, and I think the bottom line is that it is exciting. It is going to be a very exciting times for icapital.biz, Berhad. Right? And you can see through the years, whether it's global recession, local turbulence, and all that, we have performed. Okay, maybe we go to questions and comments and so on. All right. Well, quite a lot. Wow, okay. CS Fung, impressive share price performance. Thank you very much. Tan Hanwei, Capital A is a major holding of ICAP. What is your thought of ICAP late in the PN17 regularization plan? Are you worried this will affect ICAP's performance? No, we bought Capital A at a time when it was even worse than PN17. We first bought Capital A in March 2020, if you remember, when the whole world was sinking under the pandemic. That's when we bought Capital A. That's when Warren Buffett invested in all the 4 major American airlines: United, Delta. He was their largest shareholder for the 4 airlines. In February, March 2020, Warren Buffett sold every single of his airline share. But on my side here, I bought a lot of Capital A, and we have held since then. So the PN17 is an accounting thing. More importantly, is the business model of Capital A. That is a lot more important. And credit has to be given where it's due. Singapore Airlines had the big advantage of the Singapore government helping them to the tune of about, I cannot remember the exact figure, something like 16 billion Singapore dollars. Capital A hardly received any financial support from the Malaysian government. Yet, Capital A not only has survived, but Capital A has strengthened. Capital A has transformed. That's why it's called Capital A, and not AirAsia. It's transformed. It's got a lot of other businesses where, just the super app, the digital transformation, if you value that alone, oh my goodness, Capital A is worth a lot more than what it is. So the PN17 regularization is the least of my worry. Kakado, ICAP price going up and City of London resume major buying. Coincidence? Yes and no. Remember the performance that I showed you? Can we look at the performance chart again? Can we go back to slide number 2? Yeah, this one. If you notice, I end the period at 3rd of August 2023. My performance is only up to 3rd August. Right? City of London only started buying on 7th of August. So our performance is not due to City of London buying. Please get your facts correct. We purposely choose 3rd of August for the same reason that investors like you may ask. They started buying, they resumed buying only on 7th August. If I do that, maybe our share price might look even better. But I don't want to do that because the credit has to be given to the right person. So I hope that answers, that our performance is only up to 3rd August. Yap, Chonghui, first of all, good job on growing the NAV, right? Thank you very much. And Benny Koo asked whether Mike Burry is value investing or otherwise. No, Mike Burry is a different category. He's a very famous American investor, more famous for short selling. He's a different kettle of fish. He's still very young. So when you judge success, usually look for old guys like us, those who are 70, 80, 90 years old. Because you can be successful for a period of time and then boom, you hit disaster. For those of you who are interested, look up the life history of Jesse Livermore, a real person. He was around in the Wall Street in the 1920s and 1930s. He was a legend, Jesse Livermore, Jesse Livermore. In the Great Depression, when a lot of people were suffering, when economy was down, the stock market was down, he made so much money, had about $30 million US at that time, the 1930s. That's a lot of money. Guess what? He committed suicide in 1940, 1940. And when he committed suicide in 1940, Jesse Livermore was bankrupt. So if you look at Jesse Livermore in 1932, 1933, he's going to be a hero because, oh my goodness, 99% lose money, 1% make, and such a superhero. And 1940, you might say, oh my God, so kasihan, man, so kasihan, man. So young, committed suicide and then he went bankrupt. So I don't know. When you all look at success, make sure that it's on a sustainable basis, on a long-term basis. Okay, Vincent Go, hopefully with this new dividend policy, iCap stock will be in line with NAV. Yes, totally agree with you, Vincent Go. One of the objectives, not the only one, is to make sure that the share price track the NAV, or even better still, if when we get the right share owners, that it goes to a premium. 2005 to 2008, iCapital was consistently trading at a premium. The highest premium to NAV was 28%. So let's get it back to premium. Why not? Okay, Sachin Kui, picture not clear. Oh boy, so sorry about that. I'm not sure why the picture is not clear. I don't know. I've asked our IT people. Yong Yok Chun, also City of London has been accumulating iCap share again. Of course, it's so attractive. Why would these London boys invest in something unless it is attractive, right? I mean, they're not stupid. What happened if City of London and gang managed to exceed 50% of iCap shareholding? Oh, yeah, of course, if they exceed 50%, then they can take over and they can do whatever they want most of the time, right? The question is, at what price? The question is, will the current investors, the current shareholders keep selling? The current shareholders, when you sell now it's about 21, 22% discount, right, to NAV. You sell something at the discount of 22%, it's like, doesn't make sense, right? You're supposed to be buying, not selling, correct? I mean, why would I want to sell something that's undervalued? You go to your pasar malam, you go to your supermarket, right? Here you see this durian giving you a 30%, 40% chip sale. Oh, I don't want to buy. It's chip sale. I better sell the durian. I'm sorry, I scratch my head because it doesn't make sense. So what would they do? It depends on how much they can accumulate. It depends on what share price they buy at. Peter asks, but can you earn back through wise choices of buying good stocks? Printing costs not much, right? Oh, Peter, you're wrong. You are so wrong. We have to print 4,000 or 5,000 annual reports every year. So even if 1 year, if let's say, we do not know how much it costs to produce in color, right? Because those colored annual reports that you see are designed by professional houses. You have to pay them designer fees plus the printing cost. So let's say, for just argument's sake, if let's say the difference between black and white and color is 100,000, right? Here, you're talking about 18 years. You're talking about almost 2 million. I don't know whether 2 million is a lot of money or not, but to me, it's a lot of money. John Doe says, thank heavens that icapital.biz Berhad exists. Yeah, thank heaven. Yip Kim Kyung, iCapital Fund is up this few days because City of London is buying more share in open market for liquidation after winning the federal court case. Again, Mr. Yip Kim Kyung, please get your facts correct, which is why I show you our track record up to 3rd of August before City of London buy. Because when City of London buy, you all forgot. Mr. Yip, you forget. When City of London buy from 2011 to 2019, 2020, the share price didn't go up. The discount widened. So why now? Why are they buying like that now? And anyway, more importantly is our track record is not based on them buying. Our track record is without them buying. In fact, our track record up to August 2023 is based on this particular commentator in a particular investment forum who joined the forum in 2019, who is acting on behalf of Andrew Peggy and City of London, who keeps on talking negatively about ICAP every day. Out of 400 over comments that this person had made, 92% are on ICAP. Despite that, ICAP's share price, and despite the fact that City of London did not buy a single share, ICAP share price shot up 17% in 1 year, 33% in 2 years. So, you want to dispute the facts? Well, I don't know if you want to dispute the facts. I can't do anything about that. So it's nothing to do with City of London. Please, we know where you guys are going to come from, which is why our performance measurement is up to 3rd of August. Mr. Law talking about, quite irrelevant, not connected to ICAP. Peter says ICAP must have lost money in China market. True. ICAP cannot invest in China. ICAP can only invest in Malaysian stocks, 100% Malaysian stocks. So I don't know, unless Malaysia is part of China, then maybe we can lose out. But since Malaysia is not part of China, then ICAP wouldn't have lost money in China, right? David Leaks, ICAP equals Malaysia's version of Berkshire Hathaway. Interesting comparison. In some sense, it is true. In some senses, no. Berkshire Hathaway is not a closed-end fund. Berkshire Hathaway is a conglomerate. Berkshire Hathaway has got hundreds of thousands of employees. iCap Berhad has got 0 employees. iCap Berhad is closer to a unit trust fund, except that it's listed on the stock market. Berkshire Hathaway, I think 46% of Berkshire Hathaway's net asset value is coming from Apple, 46%. iCap Berhad cannot do that. iCap Berhad has got regulatory constraints. We can only invest up to 10% of any list code, 10% of the paid-up capital of any listed company. So if we're able to do like what Berkshire Hathaway does, we would have maybe got a lot of shares of Padini. We bought Padini in 0506, and our NAV would be maybe like 10 ringgit by now. But we can't do that because we are closed-end fund, subjected to different types of regulatory limits compared with Berkshire Hathaway. And more importantly, something which a lot of investors are not familiar with is that Berkshire Hathaway, because they own insurance company, An insurance company, if you understand the insurance business, there's a lot of float. People pay you the premiums, and then the liabilities may not be paid until many years later, right? So in that interim period, you as the insurance company, you get to use the float. You can invest the float, and with interest rates so high, you actually earn a lot of money. So Berkshire Hathaway, on an annual basis, has a float from the insurance business of 100 over billion US dollars, 100 plus billion. So they 145 billion cash, they got float of 100 over billion. So they got a lot of buying power. ICAP, because it does not have any operating business, doesn't have this float, which to Berkshire Hathaway hardly costs them any money. So that is a very important difference between Berkshire Hathaway and ICAP. But you're right, it's equal in the sense that we are value investors, we are very long-term focused. Buffett is, in many ways, has a lot of transparency. In the case of ICAP, we're also very transparent in every aspect that we possibly can. Kakador says, thought dividend was a no-no for many years. Why the sudden change? Good question. Yes, because in the case of ICAP, you find that remember I told you there are two objectives for the dividend policy, one of which is to help narrow the discount. So that's why the dividend policy is very innovative. Right? That's the first objective. The second objective is because some of our share owners, a high percentage of our share owners are 50 years and above. So you find that some of them, for their own personal financial reasons, need some form of regular distribution. So we have tried to meet their needs as well. And which is why in last year's AGM, I said that we are reaching out to younger investors, people in their 20s who can afford to hold ICAP shares for the really long term, for the 30 years, 40 years. So there are many strategies that we're using to tackle this discount issue. Well, it's almost 12:15, and let me see whether. Woo! Oh, there's a lot of questions. Oh boy, I think if I finish all the comments, it'll take us quite a long time. Mr. Lau met me in Penang recently, the iCap fan club. Yes, iCap fan club is in progress. We are going around looking for president, vice president, treasurer, committee members, and so on. It's definitely in progress. And when we have got concrete details, we definitely announce them. But Mr. Lau, thank you very much for the interest in helping to set up the Penang branch. Did ICAP invest in any stock that hedged against the ringgit from Stanley Saw? Not intentionally, because that's not our concern. This is a Malaysia fund. 100% of the stocks they invest in has to be Malaysia companies, Malaysian listed. So it doesn't really matter to us. One comment from CJ, who happened to comment many times, saying that I'm a pendatang China. Well, not sure how that's related to ICAP, because ICAP is a Malaysian fund, and I'm a Malaysian, right, holding only Malaysian passport. Yip Kim Kyong, I'm a shareholder of ICAP since 2015. Thank you, Mr. Yip, and still keeping your shares. You like the T-shirt very much. Thank you. Yeah, I have to tell my designers they did a good job, designed by my own staff. How to get one? We only, at the moment, because the fan club is not officially set up yet, we only have, I think, 12 or 13 T-shirts only for purposes like that. So when the iCap fan club is officially designed, registered, and we are able to print the thousands of t-shirts, definitely we will keep you in mind and let you know. Thank you very much for your comments on the design. Hello, Jin Sun. In what areas do you think ICAP needs to improve? Very good question. I have been very honest in the 2022 AGM. Our AGM is going to come soon, this year, 2023. Those of you who are shareholders, please attend. The biggest, the most important area that we need to improve is the quality of shareholders. I've shown in last year's AGM the example of Scottish Mortgage. I've shown the example of Berkshire Hathaway. I've shown the policies of another large closed-end fund in London where they intentionally, because they want to have their share price at a sensible level, so they intentionally go after retail investors, individual investors. So that is an area. 05, 08, almost 100% of our shareholders were individuals, almost 100%. That's why we had a premium. So that is an area that's why we announced last year we're going to work on very hard. We are reaching out to university students. We are doing a lot of activities with the university students. For example, in this year, our Investor Day, for the first time, Investor Day, on a Sunday night, we're going to have a talent show. So you may ask, what the heck? Why is an investment fund organizing an a talent show? This talent show is organized in collaboration with TA UMT, TA University of Management and Technology. We're doing it together with them. The talent show is only aimed at university students. So we want ICAP to be seen as an old man's club. We want ICAP to be interesting, sexy, fun to a broader range of investors, especially the younger ones. So, for example, we are having this talent show, so we get all kinds of young people to, first thing, to know that such a thing as ICAP exists. Secondly, to convince them that, look, you should invest for the long term because your retirement is at stake, your financial future is at stake. And these are the things that we are doing to help broaden and appeal to the right type of shareholders. So yes, good question on what areas do you think ICAP needs to improve. That is the most important. Second one is constant communication with the investing community, whether existing shareholders or potential ones. Regular messaging with them, explaining to them what is happening and so on. So those are the two areas that we have to improve. Of course, there are many other areas, but in terms of priority, that we think we should take care of. NG, for long-term investor, what would you sum as the advantage of ICAP? Compound return. If you look at our long-term return, it's about 8%, and I explained to you that includes 5 years of high cash level. If you take the high cash level away, we're compounding about 14%. So on average, if you look at the high cash and the low cash, now we're coming out from high cash, we're going down to low cash. So you're looking at a compound return, maybe 10, 12, 13, 14%. So if compounding annually at 10 to 14% is not impressive, not good for you, then ICAP is the wrong fund. But if that's what is good for you, then that would be one big advantage of investing in ICAP Berhad. And the other thing is this: low risk. Very, very low risk. ICAP Berhad cannot borrow a single cent. It is written inside the constitution of ICAP that should ICAP borrow a single cent, even 1 single cent, it needs unanimous approval of all its shareholders. There's no constitution that's more protective than that. It cannot short. It's not allowed to do short selling. So no short selling, no borrowings. And if you think that we are decent stock pickers, then we should be able to produce at least decent results. But I think as a stock picker, even the CEO of Lexi Partners, Colin Kingsnorth, he came to our 2012 AGM. He came personally himself, and he personally said that, Mr. Tan, you're a damn good fund manager. So if I'm a good stock picker, most likely you'll have compound returns better than on a long-term basis, more than 8, 10, 12%. So that is, in summary, the advantage of icapital.biz, Berhad. How iCap protect downside? Okay, no borrowings, no short selling, and look for values, undervalued. Just have to be patient because eventually values will play out. We used to own Selangor properties. We used to own a lot of shares of Selangor properties. So a lot of people say, Mr. Tan, why do you buy Selangor properties? So the share price never move and so on and so forth. I say, I don't know. I don't know about the share price. All I know is that the stock at that price was undervalued. And then we held it for years, many years. And out of the blue, the controlling shareholder decided to privatize Selangor properties because they felt that the market price, the share price of Selangor properties was not reflecting the true value. So they bought back the whole company, and iCap made a lot of money. So when would that event happen? I can't predict. All I know is that as the stock was undervalued, if it falls more, most likely I might buy more of it. iCap cannot short the stock market. Yes, from wholesaler, we cannot short. We don't want to short the market. Shorting the market is not easy. It's not easy. You got to be careful. David Leaks asked about what's happening to the Chinese economy. Okay, and asking, is it as bad as what the Western media is trying? As I said, if you are interested, we will have a separate session on whether the Chinese economy is about to collapse or about to boom again. But that's a separate session. Just a quick answer is that the Western media has exploited the situation the current situation to paint a picture of China that is as possibly as bad as it can be. Joe Biden, the senile president of America, Joe Biden says China is a ticking bomb. The economy is a ticking time bomb, sorry. He's so senile, he says China economy, GDP is growing at 2%. The GDP growth dropped from 6% to 2%. He can't even get his facts correct. My God. And that's the president of America. The first half, despite all this negative thing that the media is saying about the Chinese economy, what is China's GDP growth in January to June 2023? Take a guess. You give me your answer. First half, supposed to be the weak, below expectation growth, 5.5%. Hello? From January to June 2023, China's GDP growth was 5.5%. And what is the GDP growth of US? The super strong economy in that same period. Because the final figures for US hasn't come out for second quarter. So an estimated, based on the advanced estimate for US, in that 6 months where China GDP grew 5.5, US GDP estimated grew 2 to 2.4%. Who is the ticking time bomb? And whose credit rating got downgraded? America or China? Jeez. Okay, I think I've run out of time. It's almost 12:30. Still a lot of questions. And the CJ asked me to move to USA or Australia. Very funny. He's got a very cute sense of humor. Asking a 70-year-old guy to move to US or Australia. Okay, with that, I guess we have to stop because it's almost 12:30 and I don't want to be seen as having the longest live session on YouTube. Please like, share, whatever it is, whatever you want to comment there, and like us, and share. If you share, the more people know about iCap, the better for the share price. I hope. And if you have any topics that you want us to talk about, please send in your suggestions. And with that, I thank you again, and don't forget, subscribe to www.icapital.biz, our newsletter. Thank you, and have a good weekend.